payments becoming hot in Asia is largely got to do with, I would say, 3 or 4 macro shifts that are happening. The first macro shift is more around public policy and the deep commitment that some of the governments in the Asia-Pacific region have in terms of financial inclusion. So if you were to take, for example, a country like India with 1,200,000,000 people, literally 70% unbanked or underbanked, and the government's public policy effectively asking an 85% plus cash economy to get converted into electronic payments. That is the kind of a macro shift. I mean, I'd call it a tectonic shift that effectively is driving or is one of the drivers in the region. So how do payment companies and how do banks essentially respond to that kind of a demand that is generated by issuance of 600 million debit cards with just 1 million acceptance, points of sale in a country as large as India? Second, equally importantly, suddenly people have decided that time is very valuable to them, and shopping online, so e-commerce, as we know of it, has just completely taken off to the point where large e-tailers, particularly in economies like China and in India, are suddenly realizing that people are less favorable towards getting to their desktop or to their laptop, but instead prefer to do their e-commerce transactions online. So mobile phone penetration, and particularly I would say smartphone penetration. So if you think about it, 700 million mobile phones in circulation in India, a nation which probably has less than, I would guess, 10 million fixed lines, 700 million mobile connections, 35% of those are smartphones. So to imagine that India's largest e-tailer, company called Flipkart, is actually contemplating that they want to shut down their website and only channel all of their e-commerce sales through mobile phones and based upon an API. And they've been thinking about this for the last couple of months. We don't know when they're going to pull the trigger, but the very fact that they're thinking about it effectively tells you the power of this next behavior change, which is access to mobile telephones, but more importantly, smartphones that are highly able to, facilitate MCOM or M-commerce as we call it. So I would see that as the second, let's say, big shift in the region. We pretty much leapfrogged. We didn't go through the evolution that North America went through or the evolution that Europe went through. And then, of course, the third, as I see it, is the sheer demographics. So if you think about it, the ratio between the digital natives versus the, let's say, dinosaurs, guys like me, right? The 55 plus or the sub 55, the adoption rates of modern, user-friendly, convenient, absolutely ubiquitous kind of applications is just amazing. So Twitter, we are told, is effectively got its highest density of messages per capita in the metropolitan Jakarta area. Now, would anybody imagine if somebody said to you that Twitter has its highest density per capita of, tweets emanating from Jakarta? There you go. Second largest number of Facebook messages that actually get originated out of India. So effectively, this next generation is what is also creating a lot of pressure on payments companies and banks, where they are saying, quite frankly, we don't care how we transact. We really don't see payment as a, let's say, important component of the process. We see speed to being able to acquire a product or a solution. And it should be such that the payment is literally hidden underneath it, and it just about happens. So that kind of ubiquitousness is effectively what, is driving payments in the region as well.